how much house price will rise in 2022 after the record in 2021.
But first, let's hit it! Hi, this is Alan Victoria. Welcome to our channel.
And if this is your first time in our channel and you wanted to know everything about Greenville, Winterville, Pitt County, all the way to Raleigh, please subscribe in our channel and also get notified when we put a new video for you.
Honestly, we get calls, texts, and emails all the time from people just like you looking to upsize, downsize, relocate, shift. My favorite word, shift. And at the end of the day, I love helping people. My husband loves helping people. That is what we do every single day. And so we are here for you, really. So if don't be shy. We love helping you. So call or text. Because anyway, let's get back into our video now.
Yes, please stay tuned because
Absolutely.
We're gonna jump to the main points that we want to cover for you. And this is the house appreciation in 2022.
Absolutely.
And how much equity you would have made if you bought the house already.
Right, so we started talking about this conversation real quickly because I said, you know what, if people had bought in January, how much would they have made? And so my husband did all the math for us, and that's what we're going to do today, and did all the research, so I love it.
Therefore, in 2021, after the record, that house went 18.8% higher in the national
crazy.
average from the normal average that we had from 1989, that always been around 4.5 to 4.6, it was a surprise, no?
Absolutely, 18% going from a 4, that's craziness.
Therefore, many of game changer in the market, like a CoreLogic, Zillow, they have a different prediction that they expect that the growth of the market different. Even the Zillow in 2021, they said that the market is going to go down. However, it went up. It appreciated almost 19%.
And I want to say that these estimates are just experts giving their opinion, but clearly they can be wrong all the time. In fact, there are some experts calling for a recession at the end of the year, even now from Deutsche Bank. I know that's not on the video, but I mean, the truth is nobody knows the future. And if anybody says they know the future, they don't know the future. Don't believe them. Anyway, but we can give you our predictions.
Therefore, we're going to go some prediction that these big game players, they said in the news that CoreLogic, basically, they said the house is going to rise from 18 or 19% to 6% in 2022.
Which means shrink it back down, you mean back. Because again, we were at 4 to 5% before. So 6% is still on the high end of appreciating fast. But anyway. And
National Association of Realtors, they just said the house is going to appreciate just 2.8%. And Zillow, it says from 18-19% is just going to go to 11%. Therefore, you see that this huge gap between the different places that they predicted about the housing market and appreciation.
I mean, either way, all of them are expecting a slowdown because those interest rates have been going up for people to buy. So the interest rate is fighting inflation. So we are expecting these home prices to just not necessarily ever go down, because that's not going to happen. But what's going to happen is decelerate. So going back to normal instead of like these 18% highs. So anyway.
And also consider that the while home price don't fully reflect the long-term value, but there are good indicators to what people are willing to pay in the current market.
Absolutely. And indicators are what we're looking at.
Therefore, what we're going to talk about, looking at the housing market in 2021, it shows that we're going to slow down a little bit in 2022, but that doesn't mean that we have imminent bubble bursting in the housing market.
In fact, it's looking to normalize. So we are looking to go slowing down to correct itself. We're not talking about bursting bubbles of 2008 because there is no bubble. It's a supply issue that we're having, which is very different from bad loans that people were giving out.
Therefore, if you compare this market in 2022, is very similar, and 2021 very similar, that what we had a pattern in between 2004 and 2006, but there are some differences. One of the differences is the home appreciation.
Absolutely.
That we never had 19% home appreciation in 1 year.
Right.
What is the other thing? The other thing is the environment, the current environment is a little bit healthier than what we had during the
Absolutely.
recession.
I mean,
no?
the rules are there, and the rules have not changed. Rules, if you're getting a mortgage, there are very strict rules about all of these things. So, anyway.
Therefore, let's say hop into the equity that we were talking about.
That's what I wanted to know.
What comes from the statistic, they said average in whole US in the last 18 months, they said that this average that people had the home equity, it was $53,000.
Wow.
That things is very important because many of you pay the mortgage insurance or PMI, premium mortgage insurance. And if your house really appreciate that much, then you have the equity. That means the debts to what the equity that you have ratio is going to knock down. And they said this percentage was 45.2%. And we know that for a fact, if you get to the 80% and lower respect to amount of the loan that you get, basically you can get rid of your PMI.
Getting rid of that PMI is amazing. Again, there is a strong supply and demand issue. This is where the imbalance is because we just have a lot of demand and we do not have enough supply. People are staying in their homes longer for a variety of reasons. Affordability issues for new families. So we do have why people want to get in homes, why people aren't selling, and all of these things in between. But that is different numbers in a different video. This one we're doing appreciation.
Yeah, for sure. And as my wife said, when the Fed updated in March 15 and March 16, the rise of the interest rate to basically fight back against the runaway inflation, that basically is the potential that helps to cool down the market.
And even when we did our market update in our last video, which you can watch here, we had mentioned that it has slowed down slightly because of that. Interest rates have already increased and they're closer to 5% now. And as that interest rates has gone down, we have seen a trickling down of buyers in the market. It's not much, fractional, but it's still happening.
As I said, this rate is going to price out some of the buyers but it's not going to stop the housing market and appreciation of the housing market.
Absolutely.
And saying that, we're going to go to some prediction about the Bank of America. The Bank of America, they said that they predict that the housing prices is going to appreciate 10% or 2 digits in the 2022, but at end of 2022, toward the end of 2023, is going to go back to the normal, which we had 4.6 to 5%. This is the rate that we had since 1989.
Okay, I want to just kind of throw in, since my husband's going in these 1989 and all of this fun stuff, Deutsche Bank and others, as I said earlier, are actually wondering if there's going to be inflation. Recession. Recession does not decrease the home prices and what the home... Recessions are bad. It means people don't have jobs. It means that money isn't flowing so much. It doesn't mean that the housing costs go down though. So it just means that the availability of jobs and the availability of money is less. And this is where the problems of recession come in, because now money isn't so free flowing. So, yes, people buy less homes because they don't have money, but that is not a good thing. And this fear is basically brought on because the Fed is maybe pumping that brakes too fast and might skid our economy out of control. So we will see what they do next because, we don't know the future. Nobody does.
And why the reason that they believe that the price is going to grow but not at the rate that we had in 2021? The reason is a couple things. The first one is rising the household income, because we are getting back again to the normal after the COVID, and people start going to their job and making money.
We're leaving our houses.
And also favorable demographics that we have right now in the current market, and also shifting the preference of the people doing to work remotely from the home.
And you also have people who have been rushing to lock in those interest rates before they go any higher. So, you do have a rush on houses still going on.
Exactly. But just consider that we are 4 decades behind of the supply.
Absolutely.
The last 4 decades, we didn't have enough homes for all Americans. And if you wanted to go historically, see the appreciation and the house prices, if we go from December 2018 and 19, we just had 4.6%. December 2020, we had 11% home price went up. And December 2021, 19%. And predictions of this couple, Bank of America, CoreLogic, Zillow, says that is going to be around 10, and as my wife said, is going to go to normalize itself, that what they predicted in 2023, and goes toward the 5%.
And so now we're going to get into the nitty gritty and the math that I asked my husband to do, because I really wanted to know how this actually affected the pricing, and if people had bought now, what it would have been. So, I mean, those percentages sound interesting to me, but I don't know what that means, to be honest. I want to know math. So let's just kind of go into our local market so I can see the numbers. And then you give me the raw, of course, national, North Carolina, but I really want to see what it's heading in our local market.
Yeah, basically in North Carolina, the average home prices in whole of the North Carolina was $277,795 in 2022. And if we look at the year over the increase of the home price, we had 23.6% increase since November 2022 all the way to basically January 2022. We had the increase.
So what does that mean for like increase in homes sold? Is what?
The increase of homes sold went almost 10% increased. And I can say that in Raleigh and Charlotte, we had 3.2 and 2.9% this increased home sold, which we had. And what this means? Because that means we have a lot of what?
We have a lot of sales.
A lot of sales, which means what?
Which means there are not a lot of houses to be bought.
Exactly. Therefore, we had a lot of sales. And also, we know that we are short in the inventory. Therefore, demand is high, but inventory is low.
Okay.
Therefore, the amount of the houses that sold over the asking price was 62.7%.
Okay.
Therefore, if you put your house, for example, 262, almost 63% of the time, they went over the asking price.
Wow, okay. And the number of homes sold went down about 33%, no?
33%.
And 90% of homes sold in under 30 days, no?
Exactly.
And the average sale time is typically 13 days, which is up 41.5%. So
therefore, the average is a little bit went up in 2022 respect to 2021, which is predictable. But it still would say that 90% they sold under 30 days.
Okay, so now let's get into Greenville. I'm so excited. In the Greenville, Pitt County
The
area.
Greenville market also is hot as rest of the country and also whole state of North Carolina. Yeah. The sold increase between the March 2021 to March 2022, because we are recording this video in the beginning of the April 2022, almost 10%, 9.8 to be exact.
Wow.
And home median sold in March 2021 was just 189,387.
That's crazy. That's low. Not now.
And now is around 250,000. Therefore, you will see that we have like the equity that you made is over 60,000.
Okay, let's break it down into bedrooms, right? Because that really is what matters to people.
Like if you go to the 2 bedrooms, that is a normal family household, we can say the appreciation was 17.1% in Greenville, North Carolina.
And the average in 2022 thus far was almost 110,000. So let's go into 3 bedrooms.
And 3 bedroom appreciated 11.8%.
Which is about 190,000.
And 4 bedroom appreciated 8.7% in Greenville.
Which is 299,000.
And 5 bedrooms appreciated 36.2%.
Which is 440,000.
Therefore, imagine guys that with all these numbers that I'm telling you, imagine that how much the equity you would have made if you invest and the bought.
Right. So now what about Winterville?
Winterville, it appreciated 15.3% in this period.
Which is $250,000 on average, but that went from 216 to 250. So again, it's up just from the.
And then we just want to tell you that from January to February, we had 2.6% home appreciation, and from January to March, we had 0.6% appreciation.
Which means, let's just do math for me. So if I had $100,000, you're telling me like $100,000 house, easy math, right? So if with the 2.4 and the 6, can I add it and say 3%?
3%.
So it means I would have made $3,000 in equity just from that $100,000.
Just for $100,000, you would have made $3,000 equity. In the house.
Awesome. Now I understand. Okay, so
therefore, if you look at the statistic again, in February, February 2022 in Greenville, we had 247 houses sold, 242, and in March 2022, 247. Therefore, 2.1% we had increase of sold.
Right. So let's go break it down though in the past year. So 59% sold over asking price in Pitt County. 18% went under asking price and 24% went at asking price. So is it possible to still get that asking price? Yes, depending on what home. So it depends on the numbers that we're talking.
Therefore, in 24% of the time, you still can get asking price.
But 59% of the time, no.
No.
But anyway, and then once in a while, if it's an interesting house, and notice how I said the word interesting, then maybe we can get it under. But that's an interesting house. Anyway, I hope this video was useful. I learned a lot. I hope you did too. I'm so excited that my husband did all this research for us because I really learned something. So that is it. And we're here to help you.
And don't forget to call us. And we are happy to make you and looking forward to the next video to see you guys.
And if you ever want us to make a specific video, put in the comments. We'll look and we can maybe make it happen.
Okay. And have a wonderful day, guys. And talk to you soon. Bye-bye.